SCHD has been one of the most popular ETFs for dividend investors in 2023, but whenever the masses are excited about something, I tend to be just a little bit skeptical. And since an ETF is just a portfolio of many stocks, one of the ways to analyze it is just to analyze all the stocks in the portfolio. So in this video, we'll be taking a look at a lot of data that I gathered on the individual stocks in SCHD, and we'll try to gain a better understanding of how these companies in the ETF are performing and how they might perform in the future, which will tell us how SCHD might perform in the future. First off, let's just take a look at what exactly SCHD is. So SCHD is Charles Schwab's US Dividend Equity ETF, and essentially the fund just invests in dividend stocks, and it has a focus on the fundamental strength of a business relative to its peers, and it also has a focus on a sustainable and growing dividend. And SCHD has certainly done a great job of growing its dividend over the past 5 years. It's grown the dividend on average by 13% annually, and over the past 10 years, it's grown the dividend by about 11% annually on average. And all of this has happened with a dividend yield that is consistently over 3% and is right now at 3.75%. So at first glance, this really looks like a strong combination of current dividend yield and dividend growth. In 2023, however, the dividend did only grow by about 3.8%, which is the lowest dividend growth in SCHD's history going back to 2011. So that is part of the picture I want to examine a little bit, whether this double-digit dividend growth is truly sustainable for many years to come. So as always, I did create a spreadsheet to gather and showcase all the data. So let's hop into that spreadsheet right now. And essentially what I did is I just downloaded some of the data from SCHD's website on their holdings. So I got the ticker symbol, percentage of the fund, name of the company, and sector from SCHD's website. And then I gathered the rest of this data on my own. So I basically wanted to look at, first of all, the dividend growth of all the underlying companies over the last 10 years. And then I wanted to look at the earnings per share growth of those companies over the last 10 years and compare essentially those metrics and see how they lined up, and also see how they lined up to the dividend growth of SCHD as an ETF. So what I did is I pulled in the earnings per share 10 years ago and now, and then I calculated the earnings per share growth annually over that time period, and then I brought in the dividend now and dividend 10 years ago and calculated the dividend growth annually over that time period. And essentially what I see is that the weighted average dividend growth of all the companies in SCHD is about 11.7%. And then the weighted average earnings growth over the last 10 years of all those companies is 12.1%. So the first kind of thing that jumps out is that earnings growth is greater than the dividend growth, which means essentially that dividend growth is sustainable. It's being backed up by a growth in the underlying business, which is great for investors to see. And then also we can compare all of that to the dividend growth of the actual SCHD ETF over the last 10 years, which has been 11.4%. So essentially that dividend growth of the businesses is pretty much in line with dividend growth of the SCHD ETF, which makes perfect sense. And then also I calculated the yield, and the yield is 3.75%, exactly, pretty much exactly in line with SCHD's yield. And then I calculated average years of dividend increases, which was about 22. So definitely not something super impressive there, but a solid track record nonetheless from these companies. And then finally, I calculated the average payout ratio, which was about 72%. And another thing I calculated here was the number of companies that had negative earnings per share 10 years ago was 15. So 15% of the ETF. And I'll talk a little bit more about that later, why I did that and my thoughts there. But we can also take a look at the sector allocation for the ETF. So the biggest sector is industrials, just over 18%, then financials at 16.5%, and healthcare at 15.8%. I think notably for me is tech, which is only 11.4% from an ETF that has double-digit dividend growth. I would expect tech to be a little bit more. But also, if we look here, the dividend yield is over 3%, almost 4%. So again, it makes sense within that regard for tech to be lower because if we're going to see dividend yields above 3%, it's likely not going to be super heavy in tech because generally tech just has lower dividend yields At least most of the companies do. So like I said, the one thing I did see is about 15% of the companies did have negative earnings, 10 years ago. And at first glance, that does seem a little bit concerning, but I don't think it's really that big of a deal. I guess my feeling here is that a lot of the smaller companies that SCHD owns are probably experiencing higher growth right now. So, if they're in kind of a high growth phase, then 10 years ago they might have had negative earnings, but then the earnings grew a lot and are doing well now. And that also allows them to grow the dividend quickly. But what that means is that at some point in the future, that growth is likely going to slow, and then they likely can't grow the dividend as quickly, which isn't good for SCHD investors. But another thing that factors in here is turnover rate, and SCHD's turnover rate is 27%, which means every year they're replacing about a quarter of the companies in the portfolio. So theoretically, they can kind of own the higher growers for a shorter period of time, and then when their growth slows down some, they can sell those companies and move into something else. That's certainly a lot easier said than done, I would say. I would say that strategy is pretty difficult to implement, but that's not exactly how SCHD works anyway, because SCHD is a passive fund essentially that just tracks in an index, which is the Dow Jones US Dividend 100 index. So pretty much the managers of SCHD don't really have any control over the fund. Whatever this Dow 100 dividend index does, that's what SCHD has to do. So like I said, I don't think the fact that these companies had negative earnings 10 years ago is really a big deal, but it's definitely something to keep an eye on. The other thing that might be a little bit of a concern for me is, like I said, the payout ratio, which is 72% right now. That's not really super high for your standard dividend company, but for a company that's growing quickly and growing its earnings, and putting that earnings growth into dividend growth, I do think 72% is pretty high, because that basically means they're paying out the majority, the vast majority, that is, of their earnings as dividends. And so they're not using their earnings to, or using much of their earnings to reinvest back into the business. And in most cases, you need to reinvest those earnings back into the business to continue growing the business at a high rate. So I do think that is a little bit higher. The last thing that some investors have been worried about recently is the much lower dividend increase in 2023. But I don't think that's really much to worry about. SCHD is essentially just passing on the increase of the constituent companies, and those companies, it's not really that surprising that they're increasing the dividend a lot less this year, because of tough years they faced in 2022 and 2023. And there's also lots of economic uncertainty ahead. So they might be, increasing the dividend a little bit less, kind of trying to pay down debt more or stockpile a little more cash, something like that, to prepare for difficult times ahead, which may or may not end up happening. And I think it's important to understand as well that we really haven't seen any performance from SCHD in a recession since they did start in 2011. So we really haven't seen what happens to the kind of companies that they own during a slowdown, a drastic slowdown in the economy that turns into a recession. So if I'm being honest, these dividend and earnings growth metrics turned out much better than I was expecting for these constituent companies in SCHD. And another thing though to keep in mind is total return. So dividends are great, but total return is pretty important as well, I would say, for most investors. And when we compare an investment in SCHD to the S&P 500, the NASDAQ, and the Dow, which are the main big indices that people pay attention to, we can see that the S&P 500 beats SCHD by a little bit. The NASDAQ does blow SCHD out of the water, and SCHD does take the win over the Dow with a very small margin. For me, I would say the S&P 500 is kind of the gold standard, so I think that comparison is the most important. And so we can acknowledge that yes, SCHD has not beat the S&P 500 over the last 12 years, but I will say that the S&P 500 has had an excellent run during that time period that has really been fueled, I would say, by the large cap and mega cap stocks. And SCHD seems to have a fair bit of smaller companies in the fund that aren't contained in the S&P 500. I wouldn't say there's really small caps in there, but there are some mid caps, maybe larger mid caps in SCHD that aren't in the S&P 500 at all. And so I think that could be part of the reason for the slight lag against the S&P 500. And in general, small caps or smaller companies haven't performed as well in the last 10, 15 years as these mega cap companies that are in the S&P 500. And so there's, a reasonable chance, at least, that we could see some sort of rotation back towards these smaller caps or at least slightly smaller companies, maybe in the next decade. And at that point, SCHD might be able to outperform the S&P 500. Obviously, that's all a speculation, but that's just some consideration that these things are possible. And just because, even though 10, 15 years seems like a long period of time, there could be some shifts in market dynamics that, make the next 10, 15 years behave differently, and, different results could happen essentially. All that to say that I definitely don't think that SCHD is a bad investment, even compared to the S&P 500. I do think it matters what your goals are and what kind of an investor you are when considering an investment in SCHD. I think if you are looking to build as much wealth as possible over the next 10 or 30 years, then probably just sticking with the S&P 500 is probably going to be a better and more simpler choice than SCHD in my opinion. But as always, I love to hear your thoughts on SCHD in the comments below, and you're more than welcome to share those in my free Discord server as well, which will be linked in the description. Thanks for watching to the end of the video. I really do appreciate it, and I'll see you all in the next one.